What's up, my people? So today we are going to talk about market structure shift and the relation, or about the market structure shift, the relationship between the time frames with the market structure shift. Most of the time you can see a market structure shift formed, but it ends up taking out your position or going back to your the area where you put your stop. So let us dig in today and see how you could identify the valid market structure shifts from the invalid ones. I'm giving us a trick here. This is now this Nasdaq 1 hour time frame, and we are going to look about talk about this market structure shift that happened here. This nice market structure shift happened here that initiated this move, drawing to this area of liquidity with these two relative equal highs that formed here, which was then reached, broken, then the market rallied down this move. And we're gonna identify this market structure shift and the relationship on how you can capitalize on this strategy with the lower time frame buyers, with the lower time frame, so that you can identify the true market structure shift and how to capitalize and get the trades from it. So let us dig in. So we will be going down to 15 minutes time frame, since we have already identified this market structure shift here that happened here. This is a very nice market structure shift that broke this high and left a nice fair value gap, which we always talk about here. Market structure shift leaving a fair value gap, then at nice retracement, then you can take a buy here, take profit here. As you can see, it reached, and we can begin to 15 minutes in the 15-minute time frame. This is the 1 hour market structure shift that we saw, but with this we can see another nice market structure shift that happened on the 15-minute time frame here. This is the low. This is a new high that formed and it was broken here. A nice market structure shift that formed here. You see, there was a nice market structure shift. It left a nice fair value gap here, and the market rallied up. And this is the New York session at around 10:45. The market structure shift happened at around 12:45. It was not a very big move day, but you could capitalize from here to this, below this inefficiency here, so that you can capitalize on your trade. A nice 1 to 3 trade. It was possible. We will also drop down to the lower time frame, like 5 minutes, so that we can refine our trade very well and get ourselves a nice setup so that you can identify it more clearly. And as you can see here, after this market structure shift 15, the next day, or this one was on a Tuesday, and on a Wednesday, on the New York session 9:15, the market rallied down, failed to take out this low here, since it's a nice order block and the retracement of this market structure shift. And as you can see, it retraced here, had a very big explosive move here, took out this high and rallied up till here. Then on Wednesday, it closed on the Wednesday in this low, but on Wednesday it closed here. On the Thursday, it just rallied down a little bit, then went up. Then on the Thursday, this was the whole move of yesterday on the Thursday. And as you can see, this market structure shift, we can drop down to again 5-minute time frame. This is the 1 hour market structure shift. I wouldn't want to move it, so that you can be able to go back and retrace it on your charts. So as you can see here on the 5 minutes time frame, this was the high that created this low. And as you can see here, this high on the 5-minute time frame, it was taken out here with this wick here, took out this high, failed to take out this high too, but retraced down. And as we always talk about, there is another mini market structure shift, market structure shift within a market structure shift. When you see this happening, if this low is taken out, then the market structure, or with this retracement, then the market structure shift was invalid, and you cannot you cannot enter on that market structure shift since it is invalid. When the market closes, the body closes below these candles here, since it indicates that the market is willing to take out this low and continue downwards with this downward movement. But after this happened here, first it took out this, leaving a fair value gap here, then took out this one, a nice retracement, and as you can see here, after this retracement reached this, filled this fair value gap here. It filled this fair value gap here, but there is another small fair value gap here which wasn't filled at that moment. It wasn't filled, but the wicks dipped in that fair value gap till the midpoint of this fair value gap, that lower fair value gap here, and rallied higher. When this market was rallying higher, you could be able to identify like this a very nice order block which resisted these two, let me delete this, resisted these candles from closing below it. I categorize it as an order block. The last black candle before this upward movement. As you can see, the market rallied up, tried to go down again, but the bodies didn't close below this candle. This was a nice indication that this market structure shift and this one were kind of valid, since you will be risking a nice 1 to 3 trade. You could have taken this trade from here, put your stop loss on this low here, but trade entered from on this fair value gap here, take a nice 1 to 3 trade. You could have took your first profit, take first profit here, and the other one below this big fair value gap, these two candles that were followed here. There's a very nice fair value gap which indicates a draw to liquidity. But with me, I usually like to take my profits before these big moves here, before these big fair value gap candles. I usually take my trade, a nice 1 to 3 trade here, as you can see here, nice 1 to 3. And when we measure with the fib, I previously talked about the Fibonacci and how we can use it. We can use it like this, taking that low to this high here, taking that low with this high, with that perspective. As you can see, the market landed on the 0.662 level and 75 level. These are my golden zones. The 0.62 levels, which was hit here, then the market rallied up. Your first take profit will be at 0. Your second take profit, if you don't really know where to take the profit and where to take your profits from, you can use the fib to indicate on how you can take your partials and your profits. And as you can see, the place where I already put my 1 to 3 trade is where the Fibonacci level negative 0.5 level was, and you see the market rallied there before starting to retrace again. The market reached, and as I had indicated, is a nice 1 to 3 trade, almost 9 1 to 3. Yeah, nice 1 to 3 trade, and with that we can have a nice trading session. With that, let us meet in the next video. Goodbye, my guys.